a couple of them which are reasonably active as compared to others. But let's start off this with getting an eminent expert. Nikhil Vora, MD of IDFC Securities, joins us right now to talk about DVRs as a space and specific DVRs at that. Nikhil, great to have you. Thanks so much for joining in. Just a primary question for somebody who doesn't understand this topic. Are DVRs mainly a retail play, considering that major institutions would probably prefer to have voting rights also, and therefore would not want a DVR but would want the underlying stock?
I totally agree. I think the fact is that DVRs in India are, while globally it's been an instrument which most corporates have used quite effectively to raise capital and not dilute voting shares. I think in the Indian context, maybe the initial response to DVR has been so weak that most players have tended to not be in that space or not raise capital through the DVR route. I think the issue is possibly on one count that funds are supposed to be custodians of capital, and by default they need to also have voting rights. Now one may debate whether the voting rights are exercised, whether it's really a voting share and so on. But the fact is that most funds compliances may not allow them to buy into a non-voting share. Second is if that's the case, is there still a case for looking at market imperfections and maybe an arbitrage opportunity in DVR? My sense is because institutions tend to stay away from DVR, and promoters also tend to use DVR as an instrument to raise capital and maybe over a period of time really sell that DVR. It's not real because it's non-voting. So for sponsors to hold on to that doesn't really make any logical sense. So theoretically there is a lot more retail participation, and thereby it's not necessarily a strong institutional framework market, and that makes it very volatile. So I think it's a tough choice for sponsors to make, especially for those who have lower promoter shareholding and still need capital for growth, as we've seen it in the case of say Tata Motors or Pantaloon or even Jain Irrigation for that matter.
Give us a sense of the Tata Motors DVR. At one time it was trading at a discount of almost 15 to 20%, but now the same has increased to more than 50%. Do you think that this gap will sustain or parity will come in the future?
I'm not really qualified to answer that, but the fact is that one is that investors need to understand this very clearly, that DVRs are incrementally being perceived as trailing stock. These are trailing stocks. These are not operational stock. They're not perceived to be operational stocks. So it's as good as owning a holding company. And holding company discounts in India have tended to vary from literally 20-30% to as high as 70-80%. So there is no real trigger point to buy a holdco or a trailing stock or a DVR unless you see operationally the business doing extremely well. So it's a tough call to make whether you can buy a telco DVR to buy into for the operational uptake in telco. But obviously if you're bullish on telco, you may as well as buy anything related to it. So the DVR might be a good option to buy in. But suffice that this is unlikely to be an institutional stock. It will significantly be retail oriented. So to that extent, I think the type of investment that one can really build into a DVR might be restrictive. So I would just say that use it more as an as a add-on rather than building up your base position into those stocks, especially for retail investors.
Yeah, let's just get a quick technical perspective at that one too. Vijay, we're talking about Tata Motors